Hello, agentpreneurs, and welcome to episode 84 of the Daily List Report. We've got a great show for you today. We've got Bruce Poltrock coming on. He's an attorney with Frandzel. He's an experienced litigator, in the commercial real estate space. He's been doing this for 30 years. And what's going to be really great about this conversation is we've talked from time to time in various episodes about what's happening on the commercial side of real estate, and that has a very big impact on what happens on the residential side. So we're going to talk today with Bruce about what's going on in the market today, what we think is going to happen in the future, and what impact this is going to have as we deal with work from home, as we deal with the economic impact of coronavirus, as we have an election coming up and a tremendous amount of uncertainty in the market. We're going to talk about some of those topics so that you can be better prepared to handle your client questions and look into the future a little bit and see which path you want to take. So with that, I'm going to bring Bruce on. Bruce, say hello to the agentpreneurs of ListReports.
Good morning. Hello, everybody. Randy, thank you for putting these functions on. They're wonderful and they're informative, and I'm very thankful to be a part of it today.
Oh, Bruce, thank you. No, I appreciate you taking some time with us today. I'm really excited to have this conversation. What we like to do on this show, Bruce, is to have different perspectives, right? And so today, as an attorney, as a litigator in the commercial space, you're going to bring a unique perspective to what's happening in the world right now that, frankly, a lot of our agents probably don't ever get the benefit of hearing. And so I'm excited. But Bruce, before we start that, why don't you just take maybe a couple minutes, and I'd like our guests to be able to get to know our audience, or for them to get to know you. So why don't you give a little bit of background on who you are?
Sure, thank you. Once again, Bruce Poltrock, originally born and raised in the Midwest, so I've got that perspective. Came out here from Chicago to USC in the 80s, went to law school, and have been working at Frandzel ever since. We are a commercial real estate litigation and transactional firm. That means half of our firm puts deals together on the front ends, be that shopping centers, large commercial multifamily apartment complex, hotels, things of that nature, industrial spaces. And the other half of my firm, which I reside in, we're the litigators. And I know a lot of people think, well, there's the lawyers, they're out there making trouble for everyone. I've got a unique perspective because many of our clients are financial institutions, and they're the ones lending monies on these large projects. But we also understand where the borrowers are coming from. And I'm not talking individual borrowers. Many times our defendants and our borrowers are corporations and LLCs that are put together to form these large conglomerates that will take out, say $5 million, $10 million, $100 million loans to finance some of these bigger properties. So what we will do is we will often do a meeting to try to work with these folks. But if litigation is needed and we need to go into court to either put a receiver in over some of the commercial properties or to do a workout, that's where I come from. Mm-hmm. Many people may say I'm only one-sided because 99%, if not all of our work is on the bank side, but it's really not the big bad banks. Without the banks, we can't have the engine run that helps investors borrow money, keep the economy going. And so what we do on our end is try to keep that humming along, of course, with the court's direction.
Yeah, no, I think that's fair. And, a couple thoughts, Bruce. First was when I first met you here just a little bit ago, I was like, man, this guy's way too nice to be a litigator. But that's beside the point. Secondly, Bruce.
I want to say something about that.
Please.
We're not in court right now.
That's a very fair point. There's another side of Bruce, which we all hope to never see. So that's a fair point, Bruce. The other thing that's, I think, interesting about this is I think a lot of people, as obvious it is, the work that you do, you have to do the work that you do, right? Because the monies that banks lend to people, if they don't pay that money back, a lot of time that money is from somebody else, right? So when we were talking about the mortgage industry and the whole waterfall of that, this money's coming from pensions and local governments. Like there's a whole chain of people who are passing and borrowing money, from each other.
100%. Randy, that's a spot on point. And a lot of folks don't realize, say you look at a very large hotel, maybe you're looking at the Montage or a big fancy hotel in Beverly Hills or in New York City. Take your pick of them. While those are major loans and they're funded by major financial institutions, don't forget that a lot of those financial institutions, the main base of the monies they have in them are from mom and pop or you and I and every day. Smaller restaurant facilities, smaller businesses, they have to bank in order to fund all of their small businesses. Your business, my law for a restaurant, a bar, any type of retail establishment. Nobody's doing that with grandpa's money sitting under the mattress. That's all coming from the banks and the financial institutions. So when sometimes those institutions get a bad name because it looks like they're stomping on folks or putting too many foreclosures out there, you have to remember that if the banks defaulted, it will lead to defaults on all of the other industries that rely on them. So It really is a symbiotic approach where you shouldn't really take sides. It should be a reasoned approach as to investment risk in commercial real estate. And remember, a lot of these loans that we're talking about, they're there for profit. This is not like grandma and grandpa's house and they're in they're in their 80s and they're going to get foreclosed. That's not the kind of work we do or what we're talking about. We're talking about, maybe you can have an ex-NFL football player that's retired and has a lot of money and he wants to invest in real estate in Palm Springs, or he wants to start a new business, name whatever the business is. He's got a lot of financial collateral, but he or she's not just going to take that and say, here it is, I'm putting in the business. You use that to get your loans and your lending from your financial institutions, which now are bearing the brunt of the risk with what's happened with COVID.
Oh, it's so true. And, Bruce, what's interesting, looking at the mortgage market in particular on the residential side over the last 3 months, is the mortgage industry has been surprisingly resilient, right? So if you look at forbearance, for example, right, most mortgage companies, model, default payments in the 1% range, let's say. And, now that we're seeing 6, 7, 8, 9%, right, and that's stabilizing and reducing now, which is great. Man, these warehouse lines that they have, the money that they've borrowed for this, it's coming from somewhere. So they've done, I think, a pretty nice job, all things considered, of making sure that they're able to continue to fund loans, and we're seeing some pickup there. But, let's talk a little bit about the commercial market, Bruce. I look at this and I'm like, I mentioned to you just a bit ago, right? And we've talked about this on the show. We're a company of 90 people or so, give or take. We've got 4 offices. They're not huge offices, but they cost us money. And we've decided to go work from home forever, right? Doesn't mean that we won't have a presence, but we don't need 4 offices anymore. We simply don't. And people are being productive at home. And Bruce, we've talked on this show about our agents and, the impact to residential, which I think will be positive. I want that extra bedroom because I need a home office. I want the bigger, whatever the things are, right? It's going to have an interesting impact there. But can you talk a little bit about what you're seeing on the commercial side, right? With any forbearance and flexibility and just all of the things that are happening, and talk a little bit about what's going on the commercial side.
Absolutely. Great introduction. And it does. You've made a point, Randy, that the commercial side and the residential side are intertwined. Let's talk about the commercial side. If you are looking at, let's just say, a retail work establishment, let's start with that before we move into maybe industrial centers or hotels. In an example like your offices, where you have 4 offices, even if they weren't major, some may be closed down. That could, of course, lead to more delinquencies because that office space that you no longer rent from will no longer drive the income stream to the investor or the owner that owns the either strip mall or building where that office used to be paying rent in. So that will necessarily drive defaults on a lot of small to medium size commercial properties. But the flip side of that, and what's very interesting, is we all saw what happened when there were shortages, when COVID hit, when everybody ran to Costco, and even places like Costco didn't have paper towels, toilet paper, and the like. What we're really seeing in the industry is the commercial industrial spaces where, say, you're driving on the 10 freeway or the 60 freeway and you see the big, long, white flat buildings. You used to look at those and think, God, those are probably ugly and there's not much going in there. They store a lot of inventory. In places like Amazon, who have to have even more places for their inventory. Amazon just bought a bunch more space in Chicago, Atlanta, and Dallas because they felt the center of the country wasn't served as well as the West Coast was. So you're seeing commercial real estate in the industrial sector actually have a major uptick because businesses need more room for inventory. And that is an unintended effect of what's happened with the pandemic and COVID. While e-commerce was on its way and commercial real estate was benefiting from it because there needed to be more buildings to house inventory, that has skyrocketed. And that's one area that we're seeing a lot of investors focus back on. Before COVID hit, there was a slight uptick in some defaults in those types of centers because those businesses rise and fall in a normal business cycle. But those businesses who have focused on their retail aspects, they want to keep more inventory on hand, because what's the point of buying something, whether it's Costco, Walmart, Amazon, or a smaller retailer, if they say, great, we'll have it to you in 2 weeks. That problem can be less exacerbated by having much more room in industrial warehouse rental space, where before maybe you stored some trucks or some moving equipment. Now those areas can be stocked full with inventory, just like if you walked into a Costco and you see all those shelves. Well, now businesses, small and large, don't want to run into that inventory problem. So we're seeing the uptick in rental rates and less defaults in the commercial industrial component than in the other components. That's some really positive news for that type of real estate and those that have invested in it.
It's a really good point, Bruce. Just to interject there, right? I shouldn't use the term commercial as an umbrella term, right? Because there's commercial industrial, and then obviously there's office space and there's retail. There's probably more categories that I'm not aware of, but loosely, right? And retail has got to be hurting given what's happening with restaurants. Office space has got to be under pressure given the amount of people out of work, right? And the prevalence of work from home. So if there's more to talk about in the industrial, that's awesome. Continue there. But I also want to get your perspective on both retail and office space.
In the retail sectors, we've all heard of the looming and filed bankruptcies. You've got the old JCPenney's of the world. You've got Neiman Marcus. You've got a store like Neiman Marcus that people used to say, wow, look at this is wonderful. They'll never have a money issue. They do, because nobody goes in and shop. So in the retail sector, there has been a bloodbath. There were usually around 3% defaults in retail establishments. And I checked the latest stats for June. We were up to about a 25% default rate, which is enormous for some of the retail centers. Now, think about that, Randy. You've mentioned it. If you've got a small restaurant that's operating in a strip mall and it's been closed or shut down by governor's orders, not just this state, but nationwide, all of a sudden you're not making your rental payments. Your store that used to go to, that was a pet shop that used to sell specialized dog bones, or you've got a smaller Mexican restaurant that's not a nationwide chain. People forget that small business makes up over 80% of the business in this country. And most of that small business is located either in small to medium-sized office buildings, or that retail is located in a strip mall shopping center. Once those rents are not paid, you've got a loan there, either by the shopping center owner or by the retail establishment itself, that can't fund those loans and pay those loans timely, because the revenue stream that everybody thought would be there is not there. So when we talk about commercial retail space, it's everything you drive by, either on the way to the work or the store, or when you're on the strip, when you're by a strip mall. Those type of places are really feeling the heat right now. And what's happening in the economy is 3-month deferrals have almost been standard. Meaning, if you're a small shop selling clothing, or you're a real estate firm, or you're a restaurant, you've called your lender and you've asked for a 3-month deferment. And it's not automatic, but let's face it, when this began in March and really hit in March and April, I don't know a business that didn't call their lender and ask for a deferment. But here's the tricky spot. If you ask for 3 months in March and April, look where we are now.
Yes.
Coming to the end of some of those forbearance terms, and you're going to have various approaches by different lenders, whether they're California banks or national federal backed banks, that has a different approach. And what people need to be thinking about, if you're an investor or you're one of these workers and you work in these retail trades, a grace period has been given. The CARES Act has also given folks $600 extra a week, which I believe ends the end of this week, July 25th.
This is the last week, and they're renegotiating now to try to figure out what the next package is going to be. But yeah, it ends this week, and that's a huge change.
And Randy, think about that. The people that have been supporting local businesses, even if they've been doing takeout or shopping a lot of that money was what came from the federal government because folks are unemployed. If we thought we saw default rates before, we're going to see lower, rates in the future, especially because I don't think that 600 is going to be extended, or if it is, it's going to be much more targeted. So you're not making more staying home, not working. That's the big issue. And so what that will lead to is actually increased potential lease withdrawals or lease endings or store closures, which then will lead to another trickle effect of more employment. So while there's some good news out there in the industrial and e-commerce center, we've all seen Walmart and Amazon have exploded and people have bought from them. We're also looking at the 80%, which are the small businesses, the mom and pop, and I am worried about them because there's been almost an artificial amount of money placed in the economy by the extra $600 a week people got on unemployment. Well, some of those folks were making more on unemployment than when they were working. And when that's cut out, are you really still going to be shopping online at Walmart, or will you be worried about paying your electric bill? So that's looming out there for commercial and retail real estate.
Yeah, no, Bruce, that's really helpful. I have a question for you, right? So just to give a quick sort of connection back to our audience, which are primarily residential real estate agents. I'm not convinced that we are ever going to return back to the levels that we saw from a retail strip mall perspective, right? We've seen massive increase in e-commerce adoption. And in fact, and I won't quote this because I will misquote it, but in essence, the leaps that we made in terms of e-commerce adoption in 3 months rivaled what we saw in, I think it was a decade, right? And so, I look at these strip malls, I look at the massive amount of retail, and I'm wondering from a residential agent's perspective, are these going to just fall apart? Are they going to all be empty? Are they going to fall into ruin? Are they going to be razed and turned to residential, which is interesting from a housing perspective? Are they going to be turned into community areas? Do you have any thoughts on what's going to happen?
Actually, Randy, you don't know how spot on you were. Oh. We're already seeing real world examples. Take your strip mall. When we say strip mall, we're saying it's half a football field long. It's got a Chinese food restaurant, maybe a dry cleaner, maybe a postal annex, just your normal everyday strip mall.
Yeah.
With the e-commerce and people buying from home, and look, let's get this elephant in the room. Hopefully, we're not going to be social distancing forever. Yeah. Once there's a therapeutic or a vaccine, you'll have people more willing to start going back to these places. Sure. But even though that occurs, there is some prime real estate and residential real estate could be placed in that area if that strip mall, which, look, face it, a lot of them are from the 60s and 70s. Absolutely. If you raise those and a developer comes in and wants to build new commercial, multifamily, big complexes, have pools, closer to work areas, we are seeing some of our investors that our banking clients are telling us, asking, look, I've got a loan on a small strip center. How about giving me some time to completely tear down the place and borrow a little bit more money and convert this into housing? That's got to make life for residential real estate agents wonderful, because if you take a whole bunch of areas that don't currently have residential real estate and you convert small, non-useful anymore strip malls into that residential real estate, I don't care if you're in Los Angeles, Hollywood, Dallas, New York, there's places like that everywhere. Yes. If you can make the construction workers work, give them the job while they're doing it, how wonderful to have extra residential real estate for people to move into. And it would also help bring down rates for the normal working person, because the more that there is to rent from or buy, the better the price competition is, and it could benefit everybody.
I think that makes perfect sense, Bruce. And in addition to that, right, you could imagine some local, state, or federal government incentives to actually build lower cost housing, because, inventory right now there's just a massive inventory shortage, which is keeping prices up, right? Home prices, if anything, are barely upticking, but in some markets they're still climbing, right? Which seems counterintuitive given what's going on in the country and the world.
It's true, but Randy, there's another point for that. That was a great point. Where you're seeing some uptick in the residential housing market, there has now been, and it's only just begun. If you remember just a few years ago, even downtown Los Angeles, people were flocking. Let's go move to downtown LA. It's gotten cleaned up. We want to live in a high rise. It's easier. Now, because of the virus, the exact opposite is taking effect. Mm-hmm. That's why some of the nationwide home builders like KB Home and so forth, some of the home builder stocks are up because now there's a flight back to the suburbs.
Yes.
So if you need more single family housing or you need more rentals, that is looking to be built again, because now people say the city centers, if a pandemic hits or a flu hits, if I'm around all these people, I'm going to get it. And I know it may be a short-term way of thinking because, like we said, hopefully it'll be a therapeutic or a complete vaccine for COVID. But the thought right now is let's build back in the suburbs. Let's go back out from the city centers where it's, quote, dangerous when there's a pandemic because of simply the amount of people. And let's go back out in the suburbs. And that can do nothing other than to help developers, your type of folks that are dealing in residential real estate. There's just more sales to take place.
I agree, Bruce. And, we've seen there's a couple things happening here now with big cities, right? So New York, we're seeing massive drops, double-digit percentage drops in rental rates, right? And massive incentives because people are trying to leave these big cities for exactly those reasons. For similar reasons, but also there's a different facet to it, is if you look at Silicon Valley, we're also seeing double-digit rent drops in San Francisco, in Palo Alto, in Mountain View, because it's simply unaffordable there. And these companies have also said, hey, you can work from anywhere. So, what I've been trying to advise agents is work with those people, right? Bring them to Boise, Idaho, bring them to Nashville, bring wherever it might be, right? Work with them to bring them there. And I'm excited to see the growth, and like you said, in a massive amount of construction, which I would expect to take place in these suburban areas, because now you can actually afford a home, right? If you're in a place like California, it's really difficult, frankly, for most people to buy a house.
That was spot on, especially about the Googles in Silicon Valley. Some of those homes were upwards of almost 2,000 square feet.
A square foot, exactly.
$2,000 per foot. And you were getting, I would say, 800 square foot homes that were going for $2.5 million.
Yep.
That is not only was that not sustainable, that's not going to happen once all the workers at Google start working from home.
That's
so you're
right.
going to a reduction in those prices, but not everybody's going to need to live in an 800 square foot house because it's the only thing you can afford. You'll start getting, I think, and some of our banking clients have said this, more reasoned approach to normal size homes that aren't so ridiculously priced. And the more you build, the better you'll be able to get in. And you also mentioned Boise, Idaho. I don't know if you knew how right you were, but that place before the pandemic was growing. It's now supposedly the number one growing real estate residential market in the country because people are thinking, if I'm going to work remotely, why don't I jump in the Snake River when I'm done? It's still much less expensive than living here in Southern California. And with the remote working, the sky's the limit on that.
Absolutely. Bruce, I want to talk about one more point here, right? Which it may seem obvious, but I want everyone to hear it also from you, right? Look, the firm that you're at, the creditors that you represent, right? They're trying to get paid, right? And the thing that I try to preach a lot on this show is as our agents are trying to talk to their sphere of influence, right? Their buyers, their sellers out there, a lot of individuals, and you know this, right? When times are tough, they just sort of put their head in the sand and they don't deal with stuff. And the worst thing you can do with a creditor is not talk to them. And so can you just talk a little bit about the fact that at the end of the day, like you said it actually, Bruce, at the beginning, you said the first thing we do is we sit around a table, right? Whether it's virtual, right, or real. You sit around a table and you're like, let's work something out because nobody wants to go to court. Nobody wants a protracted trial, right? You just want to get paid. You understand that they're in a difficult position. So can you just talk a little bit about your advice for our agents as they're talking to their sphere about pulling their head out of the sand and dealing with these issues head on?
Absolutely, 100%. The more information and the more open an investor, a borrower, anybody in residential real estate or commercial real estate, the more open you are, even with bad news. And I want to make that very clear. You don't always have wonderful news because that's why you're meeting with your banker anyway. All a banker wants to do is not be in a dark forest. We have literally had to sue hotels, shopping centers, big industrial centers, because the borrowers won't schedule a meeting with their lawyers to come in to talk to us. And so what is the human nature? They're hiding. Things must be horrible. We need to get in there and take over this business. If we have a meeting, even without great news, you want to talk to your lenders. I don't care if it's commercial, residential. Information is key. And even bad information is key, because if there's bad information, there's going to be a light at the end of the tunnel, just like in the commercial real estate market right now. COVID won't go on forever. There's going to be great buying opportunities, but the more information you can give your lender, good or bad, the more they feel there's a trust and they will work with you. And these 3-month forbearances that we talked about, and these deferments, how the borrowers have spoken to their lenders during that time, not, okay, it's March, I need 3 months, we'll talk to you when it's done. Keep them updated. If you're a restaurant or you're an apartment building, or you're just a simple person that doesn't have a business, but you're trying to get by and pay your bills, call your lender, call your mortgage company. If it's your home you're having a problem with, ask for the deferment. They'll say, give me some information. Say whether COVID has affected your finances or not. Did this begin pre-COVID? Be as upfront and honest as you can. And if you're advising your agents, Randy, on that, many people think the more the bank knows, the worse it can be, because they're just going to use it against me. I have to tell you, for being 30 years in this industry, information that officers inside the bank have and special asset folks, the more they can report internally to their committees, the more it looks like they're doing their job, and the more beneficial that can be for you.
Yeah, Bruce, really well said. I'm glad that you got a chance to deliver that message, because it's such a critical point that a lot of people seem to miss. And I get it. It's human nature, and you're down and you're scared and all of that. You just can't stop talking. Hey, Bruce, is there anything else that we didn't talk about today that you think we should chat about before we wrap up the show?
Yeah, I do want to briefly mention hotels, because we've all thought about those. We can obviously imagine that hotel delinquency rates have occurred. We've gotten some uptick in the amount of folks that are staying in hotels. I think in March and April, it was down to about 10%. Yeah. Now it's marched up to about 40%. But remember, a lot of these hotels need at least 60 to 65% occupancy to even break even. Even your best hotels, I know when you book, it's like, it's expensive. Why does this cost so much? They're often not fully rented out. Yes. Well, without travel, I'm just worried about the hotel sector, because I think that's looming out there. So we've got some positive news out there. If you're looking to maybe be an agent in the residential area, because we'll have more construction and there'll be a flight back to the suburbs that we talked about. But if you're a hotel investor, I would be a little concerned about that. And one other thing that people may be dealing with, and whether it's residential or they have a small business, we've all heard of force majeure clauses.
Yes.
That is the, quote, act of God or governmental act that prevents me from performing either in my business or my home loan or my job. There's a lot of case law being done right now about whether, say, Governor Newsom's executive orders, which had an eviction moratorium, are those orders that can be enforced? Is that a force majeure, meaning a clause in either your mortgage or your business or your lease, which says you don't have to pay rent because of a outstanding happenstance, a pandemic, a force majeure, an act of God, an act of government that stops you from being able to pay your mortgage? I want you to know those are looming out there, and a lot of your agents may wind up having people ask about that. What if I buy this house, but then COVID continues, I have a financial problem, or my business is going to be affected by it, and if I buy this house, I may default immediately on the mortgage? Those are all things that lenders and real estate agents are going to have to think about, and there's going to be pretty much new clauses, I think, in a lot of residential real estate contracts called COVID-19 clauses, where we may have had a force majeure clause before, but now it's actually going to be called COVID-19.
Interesting. You know, Bruce, I'm so glad you brought that up because it was on my mind a couple weeks ago, and I didn't even think to ask you, though I clearly should have, is just this point of force majeure, right? So it's happening right now, it sounds like. I mean, there are people who've signed, commercial leases, and there's a force majeure clause who are saying, hey, this is an act of God, whatever you want to call it. This is beyond our control. I want to terminate my lease. What's happening on that front?
Absolutely. And rather than terminating the lease, they're actually getting to the point where they don't want to make payments for more than 3 months. This is being litigated right now in the bankruptcy courts, and it's being litigated. I just read a case from the Seventh Circuit, which is the Chicago area, and you have a federal sitting bankruptcy court judge literally went through, and when the borrower said there's a force majeure clause, and the governor of Illinois is Pritzker, if anybody needs to know that, he issued the same orders as our governor, Newsom, and this borrower, which was a company that owned shopping centers, went in and said, we can't make our payments because of the force majeure clause. That had in it a governmental action clause, meaning shutdown. You have to social distance. You have to close your business. You can't operate unless you're an essential business. So a lot of these were determined to be non-essential businesses. Mm-hmm. And so the judge literally went down to the minutia and said, how much of your business have you lost? And the borrower's counsel came out and said, we've lost 75% of our business. We can do online and maybe some outside store pickup. The judge went through, and it would take forever for me to discuss, and I'm shortening this, went through all the financials and essentially said, I hereby rule you only have to pay 25% of what you owe because you've proven to me, because of COVID and force majeure and the governmental actions which deemed you a non-essential business, you've lost 75% of your income. So you're not scot off the hook free, but I'm going to have you pay only 25%. Of course, the lenders were freaking out.
Of course,
because if you all of a sudden have a judge determine how much now you only have to pay on your loan, those are well above probably what more we want to speak about today. But Randy, that's looming out there, and you'll start hearing that. And the folks that don't like judges making law, they want Congress people making law. Mm-hmm. If you're going to have judges start determining how much based on what you tell me you lost business-wise, you're opening up a whole can of worms, and that's to come.
That's crazy. Yeah. No, Bruce, thank you for answering that and providing that perspective. It's fascinating. Bruce, I think we're going to wrap up today unless there's anything else that you want to cover.
No, I just think it's fascinating. The commercial real estate sector does intertwine with residential. Look, let's face it, the folks who are buying product where you need the inventory, we live in our residences, we live in our homes, we live in our apartment buildings. So it is all completely intertwined. I think, Randy, what's going to happen if the extra $600 a week for unemployment goes away, you're going to see an even harsher default rate. And you may see an even bigger problem. But for your agents in the positive sector about it, I think one of the most important things we spoke about today is the raising of old strip malls that may not make sense anymore. Yes. They were starting not to make sense before the virus. And turning that into residential real estate, which agents can market and bring more people and have more apartment buildings. While it may depress prices, because there'll be more availability, which is good for the consumer, mm-hmm. There will also be more business for agents because there'll be more properties that they have to rent or sell. So agreed. I think there's some good and bad out there. I wouldn't want to be a hotel investor right now. Yeah. I may want to be an industrial center and investor. And hey, if you had a piece of property where you wanted to buy, where you wanted to build a bunch of apartment buildings, a big complex, that may be good, especially if it's not in the city center, because we may have more people flying back to the suburbs for work, especially because of remote working.
Absolutely. Bruce, really well said. Hey, this was a great conversation. I love talking to you. I hope I have a chance to bring you back on the show to talk about what's happening and the updates along the way.
Really enjoyed it, Randy. Anytime, maybe let a couple of months pass and we'll see what positive trends hopefully there are. And great speaking to you.
Likewise, Bruce. All right. Well, I hope everyone out there, listen to that and listen to every word, because there's a lot of information that Bruce gave that may not be top of mind for you, but as Bruce said, is deeply tied to having impacts on residential real estate, right? Whether that's the conversion of these commercial spaces into residential spaces, this move from urban to suburban environments, and frankly, what's happening with the industrial space from an investment perspective, the hotel space, retail space, which we already touched on, and office space, certainly. There's a lot of things moving right now and physically moving. There's, I'll post a link to this so I don't misquote the data, but a lot of people either are moving themselves or know people who have moved out of state, out of area, right? This migration is happening right now, and that's creating a lot of opportunities for all of you out there. So really appreciate Bruce's time on the show today and giving you the perspective from a commercial real estate side, and in particular from an attorney on the commercial real estate side. And hopefully this helps broaden your knowledge and your understanding what's happening in the industry. So until tomorrow, be safe, be healthy, be happy, and we'll see you soon.